economist, a World Bank, Dr. Thomas Walker, here on the stage. Let's join our hands together and welcome him. Likewise, I would like to call upon Ms. Claire O'Brien, Senior Advisor on Social Protection, World Food Programme. Director, Center for Global Disaster Protection, Mr. Daniel Clark. And lastly, Associate Director and Chief of Social Policy, UNICEF, NYHQ, Ms. Alexandra. Let's give it up for all our panelists, and I would like to request Ms. Indu Ghimire, the chair of this session, to take over.
Thank you. Yes, thank you. It is third session. That is, our topic is shock responsive social protection and disaster financing. I think it is new for Nepal, but it is not totally new. Today, in this session, we bring together our international experts who have very rich experience on shock responsive social protection and disaster financing. The thing is, we want to link it in our context. All of you know, Ministry of Home Affairs is mandated to manage, to respond disaster, and has responsibility to manage social security allowances. The other thing is, as you all know, Nepal is disaster-prone country. We have faced different types of disaster every year. I would expect this session certainly would contribute to make our society resilient through responsive social protection and disaster financing. You all know, I think it is a new topic for Nepal, but it is not totally new topic. We have some experience on, I think after 2015 earthquake, we have some experience how we did on it. But important thing is how we build up on system for protection, to protect our vulnerable society, to make our society more resilient. Today in this session, we'll have 4 speakers, 4 presentation here. Then we followed by question and answers. It goes to the audience. I think I would like to request you in the session of discussion, you all requested to link your queries in our context. Let's move to our presentation first. I would like to request Thomas Walker to make your presentation and go forward. Thank you.
Good afternoon, ladies and gentlemen, and thank you for having the stamina to stay for this last session. I've been asked to start by framing some of the discussion today by looking at some results from a very unique study that we've just completed in Nepal, which is attempting to answer the questions: who in Nepal is vulnerable to shocks? How do they cope? What assistance do social protection programs provide? And what is the net effect of shocks on household welfare? So in order to answer these questions, we conducted a very large panel survey of 6,000 households in rural areas of Nepal. They were interviewed every year between June and August from 2016 to 2018. And we applied a comprehensive questionnaire looking at very many different aspects of their lives, including the shocks that they experienced. So the shocks module developed for the study was quite unique. We actually asked specifically about 20 or so different events, whether the household had experienced them in the past year, when they experienced them, how much they lost in terms of assets and income, and then we had a series of guided questions to try and understand the way in which households responded or their coping strategies. So I'm going to summarise our assessment of the data, focusing on the pattern of shocks, how households coped, and the welfare impacts of these shocks. So first of all, a summary. Each year, 25 to 50% of households in Nepal experienced a shock. And you can see in the graph at the right that there's a range of different shocks that were experienced. Clearly, during the survey period, the most important shocks were the earthquake in April 2015, and then also a series of blockades in late 2015 and early 2016, which were experienced by about a third of households. Then we also see frequent reports of drought in early 2016 in the Karnali region, in the Western Hill, and then also a spate of illness in 2017. Some of these losses were substantial. So the graph at the table at the bottom left shows the average losses from each of these shocks, and you can see that for the earthquake and also death of a household member, for example, people lost an average of 12.4% in terms of assets. Also, we saw flood and landslide causing average losses of 7%. It's useful to look at a few of these shocks in more detail because they were all very different. So first of all, the earthquake. The geographic distribution, I think, will not come as a surprise to anyone here. In terms of the asset quintile of households reporting the earthquake, we also found that the experience was pretty evenly distributed across the population. We found that earthquake had large impacts. 25% of households lost 10% or more in terms of their assets. And we also saw relatively similar exposure across the wealth distribution and frequent reports of government assistance. Part of this was the earthquake grants which were provided, but many of them came after the survey, so there was also a lot of ad hoc government and NGO assistance. And we see in the bottom right here, under the coping strategies, that children's education being interrupted was also reported by about a third of households. We also see that about 12% of households reported cutting their consumption, which is not as many as for other shocks, and perhaps this is due to the amount of assistance provided by government and other partners. In terms of flood and landslide, these shocks were less frequent. They affected about 2% of households annually. The average loss was 7% of assets, and flood and landslide were more likely to affect middle quintiles of the asset distribution in terms of pre-shock assets, which is shown here as I'm not sure if I have a pointer, but in the light bars on the left, we have for the poorest quintile on the far left and the richest quintile on the far right. You can see that the incidence was higher for the middle quintiles in terms of assets before the shock. But if we look at assets after the shock, we actually see that more of the households were considered in the poorer quintiles. So that actually gives you an idea of the impact of these shocks on the transition of households between asset quintiles. We also saw here for floods that there was little informal assistance. Only about 9% of households reported receiving government assistance. For drought, losses were generally smaller, about 1% of assets on average, and poorer households are more likely to be affected. And we see few reports of formal or informal assistance, informal assistance being assistance from friends, relatives and neighbours. If we look at livestock loss, and this is similar for the other agricultural shocks as well, such as pest harvest and post-harvest loss, livestock loss was more commonly experienced by poorer households, and the average loss was 3% of assets. And we see higher reports of asset sales here in terms of coping strategies than we do for other shocks. There are also few reports of government assistance. The blockade, which happened in late 2015 and early 2016, had an impact for about a third of the households in the country, and we see that the impact in terms of assets was about 2% loss for households, which could include lost income and higher prices as well, because we asked about losses generally. The impact was most pronounced in the Terai, but we see around the country that other households were affected also by the higher prices and shortages of of goods, and we see that the richest quintile was most likely to report this shock, probably because of fuel shortages. In terms of the effects, we see a lot of, the coping strategies rather, we see a lot of people reporting cutting consumption, and 22% of households reported children's schooling being affected, which was probably due to school closures. Finally, we report death in the family, which is an uncommon shock, around 1.5% of households annually, but I think it's a very telling shock because the impact is so large on families, and we got a sense through the survey of how they coped. So the average loss was 12.4% in terms of assets, and we saw that households were much likely to report borrowing in response to a death, illustrating the financial costs of this shock. We also saw higher rates of assistance from friends and family and relatives than we did for other shocks, and only a few reports of government assistance. Now, households vary in terms of their degree of exposure to shocks, and shocks are very different. So in order to look at this more closely, we estimated probit models of the probability of reporting a shock based on household characteristics. We see here, and some of these findings are not that surprising, in general, poorer households were more likely to report shocks. Farm owners were more likely to report shocks, except for the blockade. Households in the remotest areas of the country were also more likely to report most shocks, except for the blockade. And older-headed households were more likely to report disease and injury. In terms of coping strategies, we can do the same exercise, and we can see that dissaving or spending savings was the most common response. This was more common among richer households and those with a migrant overseas or with a bank account, and less common for the most remote households, which might illustrate that they have less access to savings and they certainly had less bank accounts on average. Consumption was impacted for most households for major shocks where they had to cut expenditure for the reasons I mentioned earlier, but for a small share of households they also reported cutting consumption in response to idiosyncratic shocks, which might illustrate that they were lacking the resources to pay for the food they needed. And we'll look at that in a moment as well. And also we found that while schooling was interrupted quite frequently for the covariate shocks, this was generally due to school closures or access issues. But when you look at the poorest households for idiosyncratic shocks, some of them, about 5 to 10%, were also reporting schooling being interrupted, which might be more of an affordability issue. Finally, few households mentioned government or NGO assistance, and this was specifically additional assistance or ad hoc assistance following a shock. We are aware that around 1 in 3 households is a recipient of cash transfers, and these are moderately pro-poor. And to illustrate this, we can summarise the cash transfers received by households. We see that generally the poorest quintile on the far left of each of the sets of bars here is receiving benefits more frequently, but overall you can also see that the coverage rates are quite low, and this is something that policymakers can address. Borrowing is a major coping strategy for many households, but it comes at a cost. So first of all, we found that poorer, larger and female-headed households were more likely to borrow. Households with migrants or access to bank accounts were less likely to borrow because they could more easily rely on savings. And households reporting borrowing due to a shock held 15% more in debt than those who did not borrow in response to a shock. We also find that those borrowing in response to a shock pay an average 1 percentage point more in interest on their loans. Female-headed households pay more. The richest quintile pays 2.6 percentage points less than the poorest quintile, and the most remote households pay 4.5 percentage points less than the least remote quintile. Now, around 40 to 50% of households in our sample had a migrant, so we might expect that some of these households were receiving remittances in response to shocks. In order to answer this, we estimated a model of, first on the left-hand side here, the probability of receiving any remittances, which we found didn't respond to any of the shocks, except death in the family. There was a negative relationship, which could be explained by the migrant themselves having deceased or maybe returning for funeral ceremonies. And we also find in terms of the log amount received that for most shocks there was no response, except for the earthquake, when we found that remittances had increased by about 16% in 2016 relative to households who did not report that shock. Now, in terms of estimating the impacts of the welfare impact of the shocks, this is a challenging thing to do, but we tried various methods to do this to triangulate the answers. We first conducted a difference in difference analysis using the shock as the treatment, and we also tried a propensity score matching technique. And we looked at 3 different measures of household welfare, the first being an asset index of durables, financial assets, and housing characteristics. Then we looked at per capita consumption, or per capita expenditure, and finally food insecurity. We couldn't look at each of the shocks separately given the small sample sizes, so we grouped them into 4 different groups: natural disasters, agricultural shocks, economic shocks, and health shocks. First of all, looking at assets, we find strong evidence that assets fell by 3.5% to 5% among households suffering a shock in the year of the shock, but after 1 year their asset levels had returned to the levels of comparative households. However, this actually masks a difference if we look at the shocks separately. So for most shocks we didn't find much evidence of any response of assets, but for natural disasters we actually found that assets fell by 7 to 12% in the year of the shock, and they were still 3.5% to 4% lower in 2018 in our last wave of the survey. So there have been persistent impacts on households' welfare as a result of these major shocks, which include the earthquake, flood and landslide, drought, and also fire, hail and lightning. If we look at per capita consumption, we find less conclusive results using the difference in difference and propensity score matching estimators. We actually think that consumption, according to these estimators, went up in the year of the shock, which could be the case if households had more expenses that were somehow finding their way into that part of the consumption questionnaire. We did various checks to try and net out the price effects of this, but that result remained. However, in the year after the shock, we found that consumption was lower. We did something else though. We also looked at the impact of monsoon rainfall on households' welfare. And we can see that a 1 standard deviation decrease in monsoon rainfall from the average actually results in a 0.8% fall in food consumption and a 3.3% fall in food consumption for those households in VDCs with high rates of paddy farming. And the fall in income is also quite substantial. In terms of food insecurity, we know that shocks cause food insecurity to rise across asset quintiles. So using a USAID measure of food insecurity, we see that even the richer quintiles, although they're not normally food insecure, become food insecure after suffering a shock, and more so if they have to cut their food expenditure as a result of the shock. If we look at the regression estimates for food insecurity, we find that households were 3.5% to 6.5% more likely to be moderately or severely food insecure in the year of a shock, and this effect was still seen in the year after the shock. Does public assistance help households cope? Well, we saw little ad hoc assistance received by households from government following shocks, as I mentioned earlier, except for the earthquake relief, which was a very special case. We did find that the housing damage compensation payments so far that went to the sample households, we were able to obtain that data from the National Reconstruction Authority and then link that to the household data from the survey. We found that the targeting of them is not particularly pro-poor or pro-rich, it's neutral, which is what would be expected given the policy. And we found that so overall there was that program seems to be rolling out well, but we also know that 1 in 3 households receive regular cash transfers, and these and the housing damage payments potentially could help build resilience. Unfortunately, if we look at the data, we don't find any strong evidence that that's the case. So that's something that we'll continue to look at with other techniques, but I think it may just be the case that either the consumption and assets are not responding to this, or that households affected by shocks are not more likely to enrol in these programs at the very least. So in summary, households across the wealth spectrum are vulnerable to shocks, but the poorest households are most exposed. Households mainly rely on savings and borrowing to cope with shocks, but they pay higher interest rates when they do so, especially the poorest, female-headed households and the most remote. And a large minority of households have to resort to cutting expenditure on food and other items. We also found that public and private assistance plays a more limited role than expected. We found that shocks have large and prolonged impacts on household welfare, particularly natural disasters. And in summary, we would say that this points to the need to do 2 things. Firstly, to make sure that everyone who is eligible for regular cash transfers is enrolled in receiving them. And then secondly, that we have a scalable safety net system that can expand to reach the vulnerable, those vulnerable to food insecurity after a shock. Thank you.
Thank you so much for your wonderful presentation. Mostly you have covered the scenarios of disaster in Nepal, followed by different events, disaster events, its losses, number of deaths, and some coping strategies that people followed after disaster, and some impacts of disaster in your presentation. Thank you again. And let's move to second presentation. I would like to request to Claire O'Brien for your presentation. Take your time. Thank you.
Thank you. So we heard, some of you may have been in the room just before this session when we had some concrete experiences of shock responsive social protection and some discussion in both India and Nepal. And now we've just heard about the situation of poverty and vulnerability to shocks in Nepal from Thomas. I'm going to fill in a little bit of the theory and the concept about what shock responsive social protection is and why it might be relevant to the types of disasters that we've just been discussing. So first of all, what has social protection actually got to do with shocks? All social protection in some way deals with shocks and vulnerabilities, because the whole point about social protection is that it is there to assist people who either have experienced a difficulty or who may be at risk of experiencing a difficulty. And that difficulty is likely to express itself as a shock to their household. These shocks that regular social protection can support can be at a level of the individual or the household, or they can be shocks that affect many people at once. So in the examples that we've just heard, something like the death of a member of a family might be an individual level shock. It might be just as devastating to the family as something large like a flood where they and many other people might equally be affected. The term shock responsive social protection has generally come into being to talk about the types of social protection that can support shocks that affect lots of people at once. So more the landslides, the droughts, maybe economic shocks and so on. It's not because for the household that there is any particular reason why this needs to be any different to the support they need in an individual shock. It's more that when you have a larger shock, it has different resource implications for the people implementing the response. So for people in this room, many of whom will be implementing agencies for social protection, thinking about how you're going to respond and support people in floods, droughts or earthquakes has very different resource implications in terms of finance and human resources and the planning that is needed, given the sudden intensity of the need that you might have at a particular time. Obviously, it's the job of agencies that have a mandate for disaster risk management to be leading discussions on disaster risk management and the policies. But the social protection sector can contribute to disaster risk mitigation and response. There's a few ways that social protection can help. One of them is clearly if households are more resilient to shocks in the first place, just because they are better off, they've reached a better standard of living, they have diversified livelihoods, they can cope better themselves, then hopefully the scale of a disaster should be smaller anyway. So just by having good social protection, we can build resilience to shocks, and then the size of the disaster that needs to be responded to might be smaller. That's one good reason to use social protection. A second thing that social protection can do is that you can prepare your systems and programs that are used in social protection, recognizing the fact that shocks may happen. We'll talk about this later during the presentation. So one of the things you can do is use social protection as part of the preparedness for disaster response. And the third thing is, after the disaster hits, we can talk about how social protection can actually support people as part of the shock itself, the response to the shock. So I'm going to mention run through 4 different ways in which social protection can contribute. The first one is simply to keep doing good social protection. We mustn't forget that the point of using social protection in a disaster is not so that it can necessarily do some fancy special things that are outside its normal remit. Simply doing good social protection is already going to be a help for the reasons we just mentioned. The second thing that we'll discuss is the fact that you can adjust the regular design of your social protection system and program. In some of the literature, you may have seen this called design tweaks, to take into account the fact that disaster crises happen. The third thing we'll talk about is enabling the use of elements of a social protection system by disaster response actors. So I think Dr. Rahman this morning mentioned the possibility of having what he called multi-use instruments. And so it's that idea that you might have a system designed for one thing, social protection, that you can use for something else. And the fourth thing we'll mention, which is quite commonly thought of, and often people reach to it first when they're thinking how social protection can be used, is the temporary expansion of a program by giving extra support to people who are already in the program, or by extending it to new people. But we'll count that as the last of the options because it's the most sophisticated, like sort of obscure, requiring sophisticated design details, and some of the basics are also important first. Okay, what do we mean by just keep doing good social protection? How's that going to help in a disaster? In a mature social protection system, people can access help when they need it. As we say, it shouldn't matter what the cause is. You don't want to find yourself in a situation where someone says, oh, because you lost your house in an earthquake, I can help you. But if you're just homeless because you are poor, I'm not going to help you. You don't want that kind of disparity. The cause of the problem shouldn't be the issue. The issue should be the needs of the household. This is the basis of universal social protection, which we also heard about this morning from Dr. Foyal of the Planning Commission. The principle of universal social protection is that people should be covered according to their needs with a wide range of possibilities and with adequate assistance. And flexibility in social protection systems is nothing particularly new. I mean, good social protection systems allow people to enroll when they need help and then allow people to leave when they don't need help. We can think about the ways that social protection systems can support disaster mitigation and response from 3 different levels of a social protection system. One of them is by supporting the overarching system architecture. So is there a way that you can strengthen all of social protection so that resources are better placed, there is finance in place for social protection, there are human resource capacities, in a country like Nepal that is now having much more of a federal system, are the resources and the capacities also there at the local level. Strengthening the overarching system is an important feature. Then secondly, we can support the strengthening of individual programs. We've been hearing a lot today about social security programs and many others, employment guarantee programs and so on. Every regular improvement to all of those programs is going to help in a disaster by making sure that people are gradually becoming more resilient. So gradually increasing the reach of those programs just permanently, the permanent expansion, or maybe accepting on-demand applications so that somebody can go to request assistance when they need it instead of waiting a few years for the next round of enrollment. Maybe including informal sector workers into formal social security systems, all those kind of things, regular improvements to social protection programs can help. And at the third level, we can support the underlying delivery systems, so the operational systems that make programs work, like the databases, the monitoring and evaluation, the network of payment service providers. All of that general support to social protection is going to be useful in a disaster. However, we can go one stage further, and we can make those adjustments and improvements at all of those different levels, at the level of the overarching system, the programs, and the delivery systems, whilst consciously taking into account the fact that disasters happen. So we've heard about the types of disasters that have been affecting Nepalese households in the last few years. We can think, what does it mean if there is a flood or a drought or a landslide or an earthquake? What is going to be the likely impact on the population? And therefore, how does that affect program design and implementation? We can think of this in two ways. So the first one is that social protection implementers can make plans to ensure that when there is a shock, the program itself doesn't fall apart. This is a fundamental thing that often the program itself may have difficulty operating. So firstly, let's think about ways you can adjust a program to make sure it can keep running. And then the second thing is to make that other step again and improve it so that even if there isn't a flex at the moment of the shock, the social protection program becomes more relevant. In relation to the first, we can think of things like if there's a flood or a drought or a landslide, is it going to cause delays in disbursement? Are program staff going to be able to get to work? Is the electricity going to be cut off? Will the usual payment method be accessible? And we can think through that and make contingency plans for what we could do instead, so that if something goes wrong at the time of a disaster, we already have a backup plan. A good example, for example, in the Philippines, after the Typhoon Haiyan a few years ago, they allowed people who normally got their money from one service provider to access it from another service provider when a shock hit. So, for example, if you normally receive a cash transfer through the bank in the Philippines, they said you can go to the post office and get it instead. So making those types of plans in advance is a good way of being prepared. The other one, in terms of improving the system so it's more relevant to the shock, we can think, for example, at the overall systems level of improving financing by creating links between social protection programs and some kind of contingency fund that will introduce extra financing into the program when it's needed. Maybe you might think about introducing entirely new programs that don't exist at the moment. So if in Nepal there isn't a strong program specifically targeting vulnerable households, it might be something to think about because it might be something that could be more used in relation to a crisis, and so on. The thing you have to be careful of is about making sure you don't divert these programs from their core objective. So don't feel like you have to turn all of the programs into something that is disaster related if that's going to lose its basic objective. The third thing we mentioned is to enable the use of the system by emergency response actors. This could be any part of the system. It could be sharing a payment platform. It could be making use of the staff who are going out to distribute money. It could be the M&E system. It could be the beneficiary lists. We're not saying you have to do this, and there are some criteria that you can use to decide whether it's better to use a social protection system than alternatives. In terms of the coverage, the type of support, the timeliness, the predictability, whether it causes duplication and sustainability. And you may decide that compared with doing a standalone emergency response, there are better ways, there are other parts of the system that could do the job better. But it does mean if you keep the emergency response and the social protection program separate, but then use the same common delivery systems, you may get the efficiency of the system without having this confusion that people now think they're suddenly included into a social protection program and people don't want to have it taken away from them. You can just say, oh no, this is just the emergency response with a different name, but being delivered through the same platform. And the final one that we mentioned as a possibility is the temporary expansion of programs, either through top-ups to current beneficiaries or by enrolling new beneficiaries. The first one needs a good overlap with the shock-affected population. There's no point topping up the benefits to people who weren't actually affected by a shock. And also it needs complementary support for all the people who are not in the program. With enrolling new beneficiaries, you might do this by enrolling new people who meet current criteria or by changing the criteria. I should say there is some good research, excellent research done on this already in Nepal. There's a World Bank study that was done last year on the overlap between the types of people who receive assistance and the shock-affected populations. So I would recommend that study to you, and I think the authors are over there and can tell you what the paper is. And then one final thing, if you are not a social protection person, but you're a disaster risk management person, you may be saying, what has this got to do with me? And from your side as a disaster risk person, you can facilitate the contribution of social protection actors to disaster response in a few ways. One of them, you can articulate the role of social protection in the disaster risk management strategies and policies. I think we heard today that that's already been done. We can promote understanding of each other's sectors through conferences like this, invite relevant actors to routine meetings so they're familiar with what's going on, and coordinate at the program level. So, for example, aligning the design of programs if they have similar objectives, maybe having common vulnerability assessments, trying to make sure that we minimize gaps in support, or, as we said, using elements of the social protection system if that works better than alternatives. So thanks very much. That's a very rapid overview of the principles of shock responsive social protection, and I will hand back over to the chair.
Thank you very much for your excellent presentation. Mostly your presentation covers what the social protection system is, then how it helps to make society more resilient before and after shocks. Wonderfully, you have mentioned that social protection system and a social protection program together. We will discuss later on in this issue. And you made some suggestion to disaster risk management actors, how they do work. Thank you again. Thank you very much for your wonderful presentation. And now I would like to request our third presenter, who is Daniel Clark. Just go ahead and make a wonderful presentation. Thank you.
Thank you very much, Madam Chair, Excellencies, ladies and gentlemen. So I have the honour of talking with you about disaster risk finance, and I should admit I'm not going to give a finance lecture or a lecture in actuarial science. I'd like to leave you with two main messages. Firstly, when thinking about how Nepal pays for disasters, that is disaster risk finance, policy should lead, finance should follow. And this is the experience of other countries. I'm going to be talking about the experience of other countries. And secondly, developing systems for disaster risk finance is too important to be left to financial specialists. It should be the job of everybody. I'll talk about that, how that works in a moment. So firstly, let's start in 2005 in the United States of America with Hurricane Katrina. So by all accounts, Hurricane Katrina was a real disaster. Yes, the wind blew, but it was a failure of government policy. It was the largest number of people were killed in America through natural hazard for 80 years, cost over $100 billion in damage, cost the economy more than double that. The flood defenses failed. Evacuation was late, it was less than a day in advance, and people were sent to shelters which did not have food, which did not have water, and had no security. It was epitomized by a lack of leadership and fragmentation of leadership, arguments over what federal government would do and state governments would do, which led to slow response. And what people felt were shared commitments for the country to respond to disasters fell apart in the face of the disaster. This does not just happen in high-income countries like the United States. It also happens in every country. In Ethiopia in 2015, 2016, there was a large drought. Up until that point, since the 1984-5 famine, when Ethiopia had a large drought and asked the international community for support, the international community came. In 2015-16, there was a lot else going on in the world, and international communities' balance sheets were stretched with wars, etc. And the government of Ethiopia had a humanitarian appeal they launched for $1.4 billion. They only got half of that. By the time they realized they were only getting half the money they asked for, they had to reallocate $900 billion they had a fund for an oil stabilization fund that was supposed to be investing in the economy, and they had to reallocate that to urgent drought response. But it was too late. It was already 6 months after the drought had happened, and a long time after people had started having to sell assets, and the impact of the drought had become too severe. So what do these examples have in common? So there were many failures in both of those examples, but one of the challenges that I'd particularly like to highlight is if all the decisions about a disaster, particularly decisions made about how a disaster will be paid for, who will pay, what they will pay for, if all the financial decisions are left until after the disaster, this leads to bad risk management. It is not a good approach to managing disaster risk. Specifically, after a disaster, you do tend to end up with slow, politicized, tactical decision-making, fragmented, poorly coordinated response, because it is difficult to coordinate in the throes of a disaster. You often end up with underfunded response. You know, the worst time to launch a humanitarian appeal is when the Olympic Games is on. So you get less money if you launch the humanitarian appeal when the Olympic Games is on. And if there is a flood in another part of the country, then let's hope you don't have a drought that year. Before the disaster, you also have poor preparedness planning, underinvestment in data and systems and response, and underinvestment in adaptation and risk reduction. So how can disaster risk finance help? Well, I mentioned that the way a country pays for disaster should be led by policy. So when I work with countries on developing systems for disaster risk finance, I start by asking 4 questions. The 4 questions are, and I should say I've stolen this from the World Bank, who or what do I want to be protected? What do I want them to be protected against? Who will pay? And how will protection reach the participants? And every single time I've asked that series of questions, the answers I've received from government officials has been, I want everybody to be protected. I want them to be protected against everything. I don't really know who will pay, but let's talk about that later. And we will make the systems work to deliver. Now, obviously, you need to come up with answers to these questions which are actually workable. There are always trade-offs between these. Let me talk through a few examples of countries that have answered these policy questions and used them as the basis for a system to manage disaster risks better. So firstly, on Mexico for public infrastructure. So Mexico has a challenge. You have federal government, you also have strong state governments. There is decentralization there. And whenever there is a flood that destroys local roads, destroys schools, the state government will ask the federal government for money. The federal government will say, I'm sorry, this is a state-owned asset. This is an asset that you own, you should maintain, you should pay for reconstruction. It takes about 2 years for them to complete the argument over who is actually going to pay and how. And all that time, you do not have the road rebuilt, you do not have the school back operational. So back in 1999, the government of Mexico set up a fund, the central government set up a fund called FONDEN, which is a fund for paying for disaster risk, where they agreed that the federal government would pay 50% of the cost of reconstruction of all state or municipal owned assets. So even though these were not federally owned assets, they agreed they would pay 50%, and it was the state's responsibility to pay the other 50%. And I think this was quite an innovative solution. Why 50%? There is no particular reason why 50%, but there was a number there, and that number, the fact that it was not 100% or 0%, it framed the reconstruction as a partnership between federal governments and state governments, and it meant that after the disaster, there was this shared responsibility that was codified in the budgetary process about who should pay for what and when. There's been a rigorous impact evaluation of the Mexico scheme by a team from University of Berkeley that found that this scheme, this budgetary scheme, increased post-disaster GDP in Mexico by 2.5 percentage points for the 2 years after a disaster. So it does seem to be working, even though this is a budgetary system. That scheme is now being replicated in countries like Indonesia and Philippines, who want a resilient society, who want to provide incentives for their bureaucrats to invest in risk-informed infrastructure, and they're using the Mexico model to inform that. Secondly, in Kenya, Kenya has a social protection program in the north of the country, the 4 poorest districts of the country. It's a cash transfer program. And it was set up with substantial support from a donor, in this case the UK government. And they've set it up so it is able to scale, so when the rains fail, when pastoralists are likely to not have enough food, it scales to cover additional households. And it is paid for through a partnership between donors, in this case DFID and at times the European Union, and also government. So there is a payment plan, there's a shared payment plan between the international community and government about how disasters will be paid for. And it's paid through cash. Up until that point, a lot of the disaster response involved trucking in water, trucking in fodder, which didn't always get to the right places. The scheme has been successful. It's been replicated by the Agricultural Ministry, who's now using a lot of the backbones for it for their livestock insurance program. Third example, Government of China, who had a fairly small agricultural insurance program back in 2013, and now has the largest agricultural insurance scheme in the world with an annual premium volume of over $8 billion a year. Government pays between 80 and 90% of the cost of the crop and the livestock insurance, and farmers pay the rest. And the reason why government has paid for this is they want to reduce vulnerability of households, they want to increase access to finance, and they also want to reduce rural-urban migration. And they see this agricultural insurance program as being able to meet those three policy objectives. And it's implemented through the commercial insurance market in China. The fourth example is of Morocco, where the government has set up an earthquake insurance program, where for homeowners above a certain level of income, they are required to buy the insurance themselves, and below an income, the government provides a lower level of coverage for free. So it is essentially a sort of it's a solidarity fund or a compensation scheme for people who are sufficiently poor. All those are examples of governments trying to provide more reliable public policy, make it more predictable who will pay for what and how they will pay to increase the speed and the efficiency of disaster response. So I'm going to talk a little bit, I'm nearly at the end, I'm going to talk about what a risk finance system looks like. So the way I see it, it involves three components. Firstly, you need a plan and you need the systems for response. So in the discussion now, the backbone architecture, the systems could be social protection systems, they could be other systems. Secondly, you need a fast evidence-based decision-making process. You don't want to end up in a situation like in Ethiopia, where there were so many discussions about was it a drought, was it not a drought. It took 6 months for government to work out that actually a response was needed, and actually early response would have been 3 times more effective than the late response that came through. So you need a fast evidence-based decision-making process that all the different parties accept as valid. And thirdly, you need your financing. So if you have your systems and you have your decision-making process, but you haven't worked out who's going to pay, then it will take time after the disaster to work out who's going to pay. And if a government hasn't worked out who's going to pay, often they will pay by reallocating budgets to a disaster response, and often that money comes. So government budgets are not very flexible. It's quite difficult to reallocate more than 5% of any government department budget. And often it can come from things which are budgets that are already stretched already, like operations and maintenance budgets. So these are the components of a disaster risk finance system. I talked a little bit before about the fact that developing these systems really requires teamwork. I think this really does need to be led by senior officials, and with substantial input from vulnerable people to try to work out that government policy is actually appropriate, that this is actually fit for protecting the right people at the right time in the right way. But then you do want to have technical specialists, both from the science perspective, delivery systems, so social protection specialists, for example, and also from the finance perspective. Why do you need those three? Well, the scientists, they can help to tell you what you should plan for. So you're not just planning for the shock that happened last year, you're planning for the shock that may happen next year. They can also tell you how reliable weather forecasts may be, or how reliable weather stations or earthquake stations should be in terms of assessing what the damage may be to buildings. They can tell you how likely different kinds of events may be. On the systems side, systems people can obviously help you think through what are the right systems for response so that you get the right response at the right time to the right people in the right way. They can also help you understand what is practical in terms of a decision-making process and challenge you on whether that decision-making process is going to reach the right people. And then finally, they can tell you how much it's going to cost to reach an individual in different ways. They can help you think through your budget, help you think through what is realistic in terms of your costed plan. The financial specialists can help you with all three of these as well. Yes, they can talk to you about how to structure your contingency fund, your disaster reserve fund, or think about budget reallocations. They will know the difference between what an insurance policy is and a cat bond. You do not need to know this. They can help you with that. And they can help you with other aspects. For example, setting up your systems so that to try to minimize moral hazard, so the decision-making process does not lead anybody to try to game the system in a way that unfairly benefits them at the expense of the country or others. So finally, why would you want to think about developing a better system for paying for disasters? Why would you want to pay for disasters in a different way? I think there are 4 answers that I would provide. Firstly, it can just provide speed of disaster response. Sometimes the finance itself, having the finance there on standby, is the blockage, and that can improve response. But also, just by arranging your finance in advance and being clear about what it is to be used for and who has the authority to use it and for what, that can empower delivery line ministries to know what their job is. So when a disaster strikes, they do not need to ask permission to act. They already have authority to act. They have authority to do certain things. Secondly, it can make line ministries or can make particular implementers responsible for particular kinds of preparedness and delivery systems. They know what their job is. It's not just they know what their job is when the disaster strikes, they know what they need to prepare for before the disaster strikes as well. Thirdly, if all you are doing is waiting until a disaster to decide how to respond, it's very difficult to have a participatory process, to get the inputs from the right people, to get the right scrutiny. Really, arranging a system in advance allows a much richer public policy discussion as a country about what are the country's priorities in terms of who to protect, how to protect them, how the protection is going to work. It allows for a much richer national conversation, and that rich conversation, we know that disaster risk is not something that a finance minister can wave a wand and it suddenly disappears. It is something that needs to be the job of every person in society. And having that conversation can help people to understand what their roles and their responsibilities are, and can feed into and help other people fulfill their responsibilities as well. Finally, it can reduce fragmentation in disaster relief. So the examples I've given are examples where the disaster response was the responsibility of more than one party. In the United States of America, it was partly the response of federal government and partly the responsibility of state government. In the example of Ethiopia, it was partly the responsibility of government, but also international donors would often come in and provide additional support. And really, what coming up with a credible payment plan can do in advance, and really trying to pin down people to understand who would pay for what, under what circumstances. It can help to coordinate before the disaster, because again, everybody wants to coordinate, nobody wants to be coordinated, and that is even more difficult in the throes of a disaster. It is much more straightforward to do before the disaster. Thank you very much indeed.
Thank you very much for your excited presentation. You have mentioned here many things, but I would like to mention here more 3 components here. You have mentioned many evidence and examples from different countries, how they are using this system to make their country more resilient. And the other thing is, you have mentioned here some components that we should consider to make this system more sustainable. Then you have mentioned also some potential benefits of this system, what we should consider in our context, but it is very urgent system for Nepal to have disaster risk financing. Thank you very much again. Let's move to our beautiful lady, that is last presenter of this session. I would like to request Alexandra Yester for your presentation. You take your time.
Thank you very much. It's a pleasure to be here. Good afternoon, everyone. My job, after you have heard now why shock responsive social protection is needed in Nepal, what we mean by shock responsive social protection, and perhaps how you might finance it, or a few ideas of how you might do that. My job now is to share with you a few lessons from other countries, as well as lessons from Nepal, practical experiences of how this has been done in practice. Hopefully this will help feed into your plans as Nepal finalizes its social protection strategy. So I'm intending to do this first by sharing a little bit about UNICEF's approach to shock responsive social protection, and then going into some examples and the lessons we've learned, and ending with a few policy questions. UNICEF has been working in the area of social protection now for about 15 years. And shock responsive social protection is a bit of a newer concept also for us, as it is around the world. But we've been trying to think through, as we've worked to update our approach to social protection so that we can best support our partners and the countries we work with and work with other development partners, we wanted to think, how do we do that in ways which take shock responsive social protection into account throughout? So this graph actually comes from our new strategy, which is just about to be released. And it became very clear to us as we were developing it that indeed, in supporting countries in their efforts to make social protection shock responsive, you needed to think about it in every step, in every component of an appropriate social protection system. So for example, and actually reflecting the work that you saw from Thomas in the first presentation, the evidence of who is vulnerable is critical, is a critical component and needs to be a regular part of the system if it's going to be shock responsive. The policies and legislation, frameworks, and the budgets, indeed, have to incorporate the flexibility that would be needed to respond in different ways depending on the different types of shocks that a country might be faced with. The programs themselves may require strengthening based on experience and evidence to ensure that they add to families' resilience. So speaking to Claire's point in the beginning, that it's not only about about being able to expand, but simply making sure that programs are designed in a way that will make a difference. And we saw evidence earlier today which showed that sometimes programs aren't building resilience. So what is it that we can do to make sure that that does happen? And finally, when it comes to using the systems for response, the administrative systems are hugely important, and we'll come to this a bit for the Nepal example itself. The MIS systems, how are cash payments done, how does communication work, and so forth. And so we will try in our work to think through all of these, and we invite all of you to think through this as you are further developing the policy here. So the first example to share is that of Malawi. And Malawi is a country, first of all, where a large percentage of the population is below the poverty line, and secondly, where shocks are really recurrent, drought especially, but also floods. And as you can see here, the people who, it's only a very small proportion, or a relatively small proportion of the society who's currently covered by the social protection system. So that's an issue in itself, since such a large proportion is poor. But the needs also vary when different forms of crisis strike. We know that the annual dry season in Nepal often leads to a need for humanitarian food assistance, both for the population who is receiving the social protection benefits, but also for those who are not. And so the idea was to try and find ways to expand the system, to provide higher benefit amounts that can protect the poor in normal times, and additional support during seasonal dips. There are several programs ongoing now to try and do that. One which was started in 2017, a trial to look at how you might top up, or rather to start topping up the social protection to those who were affected. And this was done providing the same amount that they would receive through the humanitarian responses as well. And then to measure, are you having the same impact, and how is it working? What are the bottlenecks that you're encountering along the way? And this has also been done providing flood recovery grants this year through a vertical expansion of the program. The lessons from the experience so far that are relevant for Nepal is that expansion takes time. It doesn't happen overnight, and I think that was referred to earlier in some of the presentations. And in fact, what Thomas presented earlier about the about monsoon rainfall made me think that quite the experience of Malawi might be quite relevant here for that as well, not only for responding to floods, but for responding to regular variation that affects the population and affects consumption. The next example I wanted to share is in Myanmar. Myanmar's cash transfer has a very flexible implementation approach from state to state. The core design of the program remains the same, that is, it's cash transfers to pregnant and lactating women, and includes emphasis on nutrition awareness. In Chin State, for example, the program follows the regular model, whereas in Rakhine, where it was rolled out more recently, the conditions for the cards that are provided were relaxed, and the cash payment method was strengthened, and unique ID cards were provided to beneficiaries in response to the situation of conflict in Rakhine. And since 2018, the program's been scaled up to 5 more states, and 5 more will be reached in 2020. It currently reaches over 300,000 beneficiaries. Here we have a good example of the fact that part of shock responsive social protection is simply having good social protection, that you're able to, and social protection which is able to continue during a crisis, which is also what has happened in Myanmar. The flexibility to context matters a lot. A takeaway for Nepal is also a diverse country, and that need for flexibility in execution to address the different challenges you find in different parts of the country could be a good thing to think about as different programs are designed, tweaked, or expanded. I have an example from Nigeria I'm going to pass so that I can spend a little bit more time on Nepal itself. We know, of course, that Nepal was an early example of trying to use an existing social protection system to provide a cash response to an emergency, and UNICEF was very pleased to be part of that process here. And as you know, this was done without prior planning. But this is also a valid approach in the sense that it creates lessons, which can then contribute to building a shock responsive system in the future. And it's one that the international community also encourages in using existing systems whenever possible. That's going to be easier and better done when the systems have been adopted. An evaluation that UNICEF supported has helped to draw lessons that can be used to help support that adaptation. And as maybe let me share a couple of the results of that evaluation. As the Minister of Finance noted this morning, that evaluation and the experience itself demonstrated that you can, and indeed you should, use existing systems to respond, whether to increase vulnerability or disaster, and that having the mechanisms in place is a great, the institutions as well, is a great advantage. So the evaluation concluded that using the existing system was viable, that it was possible to reach a large number of people quickly. But it also found that many of those affected were left out. And this points to the need to expand social protection system coverage and to make it more shock responsive. So, what's happening now? Currently, the government is working on, and of course many here will be aware, has a number of steps in place to try and work towards making the system shock responsive. And this includes additional research to inform the ongoing policy discussions, including looking at the flow of finances, looking at the inclusion of shock responsive social protection in the 15th periodic plan with an approach paper which helps to explain how one might do that. New standard operating procedures on how to use the system, because of course you'll need to have clear guidance on how to do that, and that's under development. And finally, a pilot, which is being implemented in 8 disaster-prone districts in partnership with the Nepal Red Cross. So this this pilot does a number of things. First, it's going on in 8 municipalities of provinces 2 and 5. It identifies current disaster-prone situations of the municipalities in the district and works to identify which are the most vulnerable areas and households to disasters. The idea of doing this is then to include those households in the social registry, to create a new list which can then be included in the social registry and then make use of the system much more easily if it's there. As part of that, it's important to then include the identified households, or rather to assist the identified households in opening bank accounts. And I want to talk about this because I had a chance to go to the field to Badia municipality on Monday, shortly after arriving from New York. But I'm really glad that I made the trip because I learned a couple of things. Let me come to that for a second. The one other part of the pilot is to prepare detailed reports about the livelihoods, impact of disaster, and the social protection status in these different municipalities, which can be used for policy recommendations. And this work is being done through household surveys, key informant interviews, focus group discussions, and cross-verification with the existing social protection beneficiary list. So, a couple of takeaways from the trip to Badia. Perfect. First, the demand for banking was amazing. The demand for bank accounts was incredibly strong, both from the population as well as the interest from local government, from the local authorities, as well as the banks themselves. Conversely, there was a real note that cash, that is providing cash in hand to people, could be quite problematic, that there have often been cases of elite capture of those funds, and that the bank accounts are a great way to circumvent that. But of course, they're also a great way to build financial inclusion for the country, so they've got another huge advantage. Sorry? Yes, I'm just about wrapping up. Thank you. One concern, though, that everyone felt was that it wasn't so clear how these lists would remain updated. So there was a lot to look forward to from this pilot that you'll see going on. So, happily wrapping up now with some of the key lessons that we've learned. Getting social protection right can help to build resilience. But you need, of course, to build preparedness into the system. And even if not ready, linking disaster response back whenever you can, just as it started here in Nepal. Political commitment is key. Mechanisms for coordination between ministries and departments, and including with state and local governments, are really important if you're going to do this effectively. And finally, social protection is necessary, but it's not enough to protect people and build resilience on its own. So combining with other interventions, some of the Cash Plus ideas that came up earlier today are also important to consider. And I want to leave you here with some policy questions that Nepal may wish to think about as you're planning to strengthen the social protection system overall and to make it shock responsive. Thank you.
Thank you for your rich presentation. Indeed, this presentation is very much rich because in terms of experience and in terms of evidence, I think it is very crucial to Nepal to learn many things from the presentation. Whatever you have done here, all are so wonderful. The thing is, we have to link those information in our context. We have to make our system in our context based on these evidence, information, whatever the research you have made in this sector, but we have to be selective what is feasible in Nepal and what are not. So we have to consider in our context, and we can learn many things from the presentation you have mentioned here. Indeed, we are so glad from the presentation. It will contribute in our policy, program, system, whatever we have to make our society more resilient, more sustainable. It would help. Thank you very much. All the wonderful presentation. It's time to audience. Please make some questions in the context of Nepal, what we have learned from these presentations. Thank you very much.
Hello. Thank you all the presenters for the very meticulous and comprehensive presentation about the disaster, shock responsive social protection. Actually, disaster is prone to everyone and anytime. And in the countries like Nepal, it is very crucial. I am Mahesh Chanda Pradhan and working in Central Bureau of Statistics of Nepal. And just I am curious to know that what kinds of statistical infrastructure or information collection mechanism exist to respond to respond for the shock, any kinds of shocks. For example, to identify the beneficiaries or victims like that. What kinds of, can you elaborate some kinds of your success stories from the other countries? Because I am raising this issue because during the 2015 huge earthquake in Nepal, because we could only collect the information of the beneficiary only after about 7 or 8 months, so that it is very delayed. So that what kinds of mechanism, information collection mechanism or statistical information should exist for the countries like Nepal? I am curious about these things. Thank you very much.
Hi, thank you. Alexandra, this question is for you. I just wanted to understand, in the pilot, where we reach out and give these additional benefits through the cash transfer mechanisms as disaster response, do we also have anything for, like we identified that there are a lot of excluded households, are we doing anything at the same time for those, or are those remaining excluded while this pilot is on? Just out of curiosity.
If I may take over, I think my question is to almost all of you, and I've just been thinking, so it's really something to think about. If we talk about social protection, we have on the one hand, let's say we have non-contributory social insurance, and we have social assistance, and we have social insurance, and there's also the idea that these two parts need to be strengthened and integrated. And I have been thinking in terms of if a disaster strikes, so that there are maybe not social insurance, but other types of insurance, yes? But there is also not everybody may be able to afford the monthly premiums or whatsoever to insure their house against fires, floods, and whatsoever. But what are the possibilities in this direction? Is there any research? What can we think about that?
Thank you. My name is Sabita. I'm from DFID, DFID here in Nepal. My question, I have a comment and a question directed at Daniel Clark. The comment is that your center is Center for Disaster Protection. So I was wondering if it protects disaster or you provide protection against disaster. So that was a bit of confusion to me. My question is, you stated that everybody likes to coordinate, and very few like to be coordinated. So in terms of international community, how coordinated do you think the international community is in terms of the global disaster risk financing? Thanks.
My name is Akila, and I have a question related to financing. Recently, we participated in the post-disaster need assessment exercise. And I think this is applicable in any other PDNAs as well. While we appreciate that, it brings a standard methodology to know about recovery, losses and damages, assessing the value of loss and damages, etc. I think we are often missing out on what is the loss for the private sector. So on the one hand, when we talk about financing, we depend a lot on private sector funds. On the other, when we are assessing, we do not really include the losses that happen to private sector institutions, for example, care institutions for children. When a disaster occurs, they affect the public as well as private institutions. So my interest to understand is how is it, how are the funds leveraged to also to look at the recovery and larger long-term needs of the private sector. Thank you.
Anyone else?
Hello everyone. Namaste. My name is Naveen Maharjan. I'm working in Social Protection Civil Society Network, and my question goes on like this. Civil society in Nepal has contributed in different phases of development processes. There are maximum opportunities for CSOs to extend such programs in a progressive way. However, there are less funding opportunities from bilateral and multilateral as well as international non-government organizations for CSOs. And the government has less programs in implementing social protection programs in Nepal through CSOs. Any plan you have in a country that CSOs can contribute? Any panelist you can answer? Thank you.
Anyone left? It's all, I think. It's your turn to respond the question.
Thank you. First, on the statistical information required, not only statistical, one of the slides that I didn't, the one slide I didn't present on Nigeria, they have made use of geospatial mapping to identify areas which are particularly vulnerable. And that is one particular instrument that could be considered. So some of the vulnerability mapping work that was also very well presented by Thomas Walker gives an example of some of the kind of information you might want to have on a regular basis. But I would also say that you want to, one of the things that a statistical office can do and include is data, for example, on whether people are receiving support. So did they experience a disaster? Did they receive support? Or were they supposed to and did they not receive? There are questions like this that could potentially be included, as well as, of course, doing the analysis of the impact of any support. So there is a lot that could come through routine data collection that you might do. Needless to say, all of the poverty mapping work that you would do on a normal basis through your surveys is critical for social protection work. In response to the question about the pilot, the purpose of the pilot is to create these lists, which then can be used for expansion. The lists include people who don't currently receive any form of social protection. It actually ends up can sometimes identify those who should have been receiving and were left out. So it can identify some exclusion. This is very, very, very new. This work only started a few months ago, and also there are many others in the room who could tell you more about it than I can. But suffice to say that that the idea is that this is meant to help the country increase the ways in which it would reach people who were affected by a disaster. It's not meant to say, this is the only way you could do it. So one of the messages here has been, where there are other systems which are working for providing support, or where the existing system cannot reach people, you would want to continue also to use those, but increasingly link them with the existing system. I had another answer written down, but I'm on the difficult question. But let me pass to others.
I'll pick up a few. Perfect. So on the statistical mechanism, so in terms of identifying how bad the shock was for people, you can't visit every household, you can't visit every building. The only option you have is some sort of proxy, and there are essentially two options for that. The first option is to use science, so ground observation, satellite data, weather stations, earthquake measurement stations. The second option is rapid statistical sample type surveys. So to give an example of the latter, in Mongolia, the biggest sort of disaster, natural hazard they're exposed to is it being very cold. And very cold in Mongolia means minus 30 degrees in the winter, as opposed to just minus 20 degrees Celsius. And so they have a system which is implemented by the government statistical service to do a statistically representative sample of households to see how many animals died. And that is the basis of assistance in that particular sub-district. Similarly, in India and Kenya and Mexico, they have systems to do statistical samples of the crop yield as an estimate of how bad the year was for farmers. And in Eastern Europe now, they have samples that go out and look to see what how high the watermark was after a flood, to get a better estimate of the reach of the flood, better than you can get from satellite or the previous generations of satellite data. On the commercial insurance, so yes, commercial insurance can protect people, can protect their assets, can protect their farms, their lives against livestock loss, building damage. There are two big challenges with commercial insurance for natural hazards. The first one is nobody buys it. And the second one is the quality. So on the nobody buys it, the low demand, even in California for earthquake, you only have 20% of people actually buy earthquake insurance, even though they're living on a fault line. And this is challenging. Some governments respond to that by introducing compulsion. They make the insurance either compulsory for all homeowners or compulsory if you take out a loan from a bank, but enforcement can be a challenge. The second is in terms of quality. The worst thing you want as a government is lots of your citizens to buy insurance, a disaster to occur, and then them not to receive a payout. So it's quite important, even if you have a vibrant commercial market for disaster insurance, that there is somebody who's really paying attention to the details to make sure that what people are being sold is going to pay out when it's needed and that they understand the wording. So this is an insurance regulatory function, and you want to make sure that your insurance company, the product is right, and also they're not going to go bankrupt when the disaster hits everybody. In terms of whether the centre protects disasters or protects against disasters, I mean, I think, so we work with others. So we're based in London. So, one of our 4 values is about empowerment. We work with others for them to manage their disaster risks. But yeah, I mean, I think the discussion can't just be about management of disasters after they've happened. It has to be looking ahead to think about planning and protecting against hazards. So you're protecting against the wind and trying to stop the wind blowing, becoming a disaster. And then just the final point for me in terms of the how good is the international community at coordination? So I'll leave others to answer in the context of Nepal. Generally, one of the challenges the international community faces, which is exactly the same challenge that many governments face, is that it's much more attractive for government ministers, development ministers, as well as ministers in countries hit by disasters, to provide funding after the disaster is seen on the television, rather than providing funding in advance. And it takes quite a far-sighted development partner to say, we are going to jointly partner with government to invest in resilience, as opposed to waiting until the disaster strikes and only then providing funding. And if you're only providing funding after the disaster, there is a fundamental coordination problem because there just isn't time to coordinate. Thank you.
Thank you. I think many points have already been covered, so we'll give a brief additional response to a couple of questions. Regarding the information collection that exists in relation to shock response, Alex and Daniel have already mentioned a lot about the types of quantitative data that can be or are being collected either in advance or after a shock. And I'm sure Thomas is going to say more about that as well from real experience in Nepal. I just wanted to mention a couple of other things. One of them is the possibility of doing micro simulations of the possible impacts that shocks are likely to have. So you can use household survey data that you already have and model the impact of certain kinds of shocks if that information, if information related to it is available in the household survey in terms of, for example, geographical likelihood, the likelihood of hitting a certain geographical area. That can be quite useful for planning purposes. The other thing is that besides all the quantitative data, you can collect qualitative data on all of the response side. So what are you actually going to do in relation to the disaster? You can collect data on, for example, the capacities of all of the relevant ministries in order to be able to respond to the shock, the capacities of the different programs. There are plenty of tools out there that do this job. Some of them are interagency tools that do capacity assessments of social protection. The World Food Programme has a particular one on capacity to do shock responsive social protection. I know UNICEF has a similar tool. So there are plenty of ways of getting qualitative data that can be relevant as well. And just one point on the insurance, what possibilities are there for improving the way insurance can be used in relation to shocks? One of the things that you mentioned was that sometimes the people who need the insurance most can't afford it, can't afford to pay the premiums. There are examples of countries where the government funds the premium for the poorest households to be able to get the insurance that they would need, because it's cheaper for the government to pay for that insurance premium than to support the household after a shock has hit. I'm thinking, for example, in Mali, in West Africa, where there is a compulsory health insurance, and if you can't afford to pay the premium, there is also a different type of health insurance, a non-contributory version for the poorest households. There is, and another example, the way insurance can be used is to actually introduce flexibility into your social insurance programming. So there are examples, for instance, if there is a large-scale economic shock, which is a slightly different situation to what we've been discussing mostly today, there have been countries that, for example, usually give 4 months' worth of unemployment benefit to people in the event that they lose their job, but a country might expand that and say, at the moment, we realize that people might need 6 months' worth of unemployment benefit. So there are ways you can introduce flexibility even into an insurance system. That's it. I'll hand over to Thomas.
Thank you. So yes, I'll just respond on a couple of these questions because most of them have been discussed. So first of all, in terms of the question about how you can use data, there's so much you can do. First of all, we know it's not something I've worked on directly, but a lot of people are working in Sri Lanka, where I'm based, on forecasting of the risk of disasters, and so they have pretty good models now to be able to predict floods that are coming up or droughts, and be able to pre-position then the resources to respond to that. Secondly, definitely our data set, I think, could be used linked to the census. You could build up, given we've already estimated the models of vulnerability of households to these shocks, and you have then also some decent risk maps of certain types of shock. You can build up a model and actually a map of where in the country might be the hotspots of people that need assistance, and once again build the resilience in those areas. And then finally, a very important part of being able to respond quickly is to know who are the people who not only are receiving benefits through cash transfer programs, but as I mentioned earlier, it could be vulnerable and need assistance. And for this, it's really important to have a very strong social registry that links different agencies, including the Disaster Management Agency, so that they're able to identify who needs assistance quickly. And often identification is the key word here, to be able to have a strong national identification system that allows you to make sure that the people who are coming to you genuinely come from the area that was affected, which has been a challenge in Sri Lanka as well at times, and are actually in registered and in a position to receive funds as soon as possible. So the social registry is crucial to be able to respond quickly, and I think the other data tools can be useful to predict where the response might be needed. In terms of insurance, a lot's been said. I think there was a question about what can be done for the private sector. I think the reality is, and this comes through in our data as well, that the private sector in many countries like Nepal, household sector and private sector are one and the same thing for many families, because they're farming, that is a business. So farmers are part of the private sector, and many other businesses, including childcare, are being run informally. And so it's more about extending insurance to anyone who wants it, and the private sector is also a customer for that type of insurance. And in that case, you could, I think, consider a model in which the premiums are only paid for people who have genuine need, and for others it's a market-based premium. So I'll leave it there. Thank you.
Thank you for response. Finally, time for myself. I have some concerns. I think you would respond within 1 minute. I would like to, first, it goes to the Thomas Walker. You have presented many evidence over here. We like it. But how should be the priorities for Nepal to develop its social protection system to better respond to household vulnerability? How to respond it? Yes.
So in terms of the policy priorities? Okay. So thank you. Look, I think that the main messages are here that we need to look at vulnerability not just in terms of specific groups of people, but in terms of other people in the population who might also be self-sufficient most of the time, but at risk of falling into a situation of poverty. So first of all, it's very important to make sure that all of those who are eligible for the programs, existing programs, are receiving those benefits, and that coverage gap should be closed as a policy priority. But then to have that mechanism for scalability, I think, is crucial, and building a social registry that identifies not just the beneficiaries of the programs, but others who might have missed out now because they're not quite below the cutoff, but over time they might need assistance, can be useful as well. And that's the channel that I think a lot of the external aid can flow through as well, because they tend to piggyback on these systems. In terms of agricultural shocks, I think it's very important to think about targeted programs for groups who are suffering regular and small losses from these shocks, things like drought and flood, which are seasonal in effect. And so for these areas, as I mentioned, you can predict who these people are going to be. And I think special programs can be introduced for them, such as insurance. Seasonal public works as well could be useful for the paddy farmers that I mentioned earlier, who are very exposed. And resilience building, so things like being able to ensure water supply for farmers and for people in dry areas of potential drought. So one thing we found was that the mechanism by which, and I didn't have time to go into this, but just very briefly, the mechanism by which that welfare impact came from rainfall to the welfare of farmers and their families was actually not through the wet season revenues, but through dry season revenues, because if they didn't get enough monsoon rainfall, it didn't recharge the aquifers to the level where they were able to continue farming in the dry season. So being able to look at water security, I think, is extremely important as well. And then finally, looking at risk layering, our results indicate that you have some very rare shocks, such as an earthquake with a big impact, which can be maybe financed with external assistance, but for smaller and more frequent shocks, you need to have a budgetary line to cover those, such as the Fonden program, I think, is a good example. Thank you.
Thank you. Thank you very much. Thank you very much. Then I would like to ask something, Claire O'Brien. What is the difference between shock responsive social protection program and shock responsive social protection system? These are wonderful.
Thank you. I'll answer very briefly with just one example. A program tends to be something that's got a name. It's probably, if it's something like the social security programs that you have in Nepal, it has a name, it has a transfer value, it has a transfer frequency, it has people who deliver it, it has a way of being monitored, and so on. We saw earlier that it's very easy to draw a table with lines. For each program, you can describe what it does. And the question of whether you use a social protection program to respond to a shock versus the system is the difference between saying, for example, do you want to say to somebody, after a flood, you are now temporarily included in the old age pension? Or do you want to say, you are now temporarily included in the child grant program? Or do you want to say, you are now temporarily included in a flood response program, which will be time limited, but, by the way, we're going to deliver your flood response through the same system that we used to deliver the child grant or the old age pension. And politically, it can be much easier to separate the two things out and to say we will use the system that exists for social protection, but we're running a separate program, because then you can have different beneficiaries, different transfer values, different duration, and there is less of this concern that if you make people think they're temporarily included in a particular program, it will be quite difficult to extract yourself from it afterwards. Thank you.
Thank you very much. Then again, Daniel, here. I think, Nepal, there are many natural disaster hazards that are happening in Nepal. Just like landslide, earthquake, flood. Is disaster risk financing suitable for all types of disaster or natural hazards?
That's an excellent question. It depends on what you mean by disaster risk finance. So insurance is definitely not suitable for all, but the country pays for all these disasters somehow. They pay sometimes with money and sometimes with human outcomes. So the question is, can you pay better, and ideally more with money and less with human outcomes? So I think the details will be very different. Landslide is very different to earthquake. It's very different to flood. It's very different to drought. Whether a hazard happens very suddenly and destroys infrastructure is very different to if it's slow onset and destroys crops. And this is, I think, why different countries have very different approaches, because they have different hazards that affect important vulnerable parts of the population. So there's no answer, but I think for a government, thinking through everything at once is important. You want to avoid hindsight bias, so just planning for the thing that happened last year, and that means asking your scientists what may happen next year as well.
Thank you for your response. And lastly, Alexandra Hester, I think in Nepal, UNICEF and the government of Nepal have been doing shock responsive social protection since in 2015, after earthquake. How do you think we need to go, to do next to take this agenda, to take this system forward?
It looks like you have a very good first step right now in having these discussions and in bringing all of these voices into the room. I think that it will be very important as you move forward to consider the changes in Nepal's administrative system with the federalization underway. And as part of that, to continue to think about how you provide strong institutional support for coordination. I think one challenge that we've seen everywhere in this field is around bringing together social protection actors and those involved in disaster risk management, as well as other actors, especially local governments, local authorities, who are often the first ones to know the problem and the first ones who are able to act, as well as, of course, civil society, community leaders, and others. So here you've got a certain group of voices present. It will be important to consult more widely with all of those voices and to take account of those political changes as you move forward. The first slide that I showed, the first substantive slide, suggested that you need to think about shock responsive elements in each component of the social protection system. Nepal is deeply in the process of strengthening its social protection system now. It exists, but you are trying to consolidate it now. If you can take that systematic approach to looking at how you build it in each stage, you will be far ahead of the game.
Thank you very much. we are running out of time. Thank you very much for all our presenters here in this session. It is very crucial for Nepal to make policy, to make system or program, whatever we say. It is crucial for us, I think. And lastly, thank you for participants, for your patience, for your participation, and for your queries and concerns regarding the Nepal. I would like to thank you all for your great participation here to make this session successful. Thank you very much.
Thank you so much one more time to our panelist speakers here. And of course, thank you, Ms. Indu Ghimire, for chairing this session, for bringing out this topic on floor and giving your expertise and best possible information to prepare ourselves for upcoming events. Thank you. I request you all to kindly take your seats. And with that said, we move towards the last session of this conference here today.